In this video, we're going to look at government taxation. There are very few things in life that are guaranteed, but every one of us will pay tax at some point in our lives. But what do we mean by taxes and taxation? Well, taxes are money that the government collects to pay for its activities in the country. The government sets the rate of tax that it charges, it collects those taxes, and it uses them to pay for public services. Things like healthcare, social care, the education system, police, roads, and government employees. There are three main types of tax that you should know about. These are personal taxes, business taxes, and spending taxes. But before we look at each one of these, and what the impacts of each type of tax are on businesses, let's introduce this video's main example. This is Donald Pearson, known as The Don. He is the owner of the Codfather, a fish and chip shop in the seaside resort of Blackpool. Don has built up a very successful shop over the last 10 years, and he attracts a mixture of locals and holiday makers who will happily queue to get their hands on a portion of his delicious fish and chips. Don's turnover, his revenue, is high enough that he's been VAT registered for several years, meaning that he has to charge VAT on his sales. We'll look at this a little more later. He employs 4 staff and he is registered with Companies House as a private limited company, meaning that he has to pay corporation tax on any profits that he makes. So, let's have a look at the impact of each of the 3 main types of taxation on Don's business. To all the teachers out there, show all of these videos without any ads and gain access to our growing library of over 500 teaching worksheets. Why not visit BizzWizard.co.uk to find out more? So, personal taxes are a type of tax that is based on how much money a person earns. In the UK, the main types of personal taxes are income tax and national insurance. If a person's earnings are very low, less than around £12,500 per year in 2021, they won't have to pay any income tax at all. The higher their earnings, the more tax that they have to pay. The basic rate of income tax is currently 20%. And this is paid on anything above £12,500 up to around £50,000. If a person earns above £50,000, they will pay a bigger percentage of any earnings above that threshold, above that amount. If the government increases the income tax rate, which they might have by the time you're watching this video, then that means each person will take home less pay and have less disposable income. And that means that they have less money to spend with businesses just like Don's. For the locals who live in Blackpool all year round, this might mean that they can't afford to treat themselves to fish and chips quite as often, meaning Don's sales and profits are likely to go down. It might mean that fewer people can afford to go on holiday, and that means that there are less people in Blackpool than usual, meaning fewer potential customers come into the Codfather. For the holidaymakers who do come to Blackpool, they might decide to cut back on the treats while they're on holiday, perhaps spending less on fish and chips. On the other hand, some people who might have previously been able to afford a more expensive holiday abroad might now decide to go for a cheaper option, such as, Blackpool. And when they get there, they may decide to go for fish and chips as this is a relatively cheap option. If the government cuts the rate of income tax, which is unlikely, then people will have more money to spend overall. For the locals who live in Blackpool all year round, this might mean that they can now afford to treat themselves to fish and chips more often, meaning that Don's sales and profits go up. It might mean that more people can afford to go on holiday, and that means that there are more people in Blackpool than usual, meaning more potential customers come into the Codfather. On the other hand though, some people who might have previously only been able to afford to go to Blackpool might now be able to afford more expensive holidays. Don may find that when people have more disposable income, his sales might even go down. Income taxes may also affect employee motivation. If the rate of income tax goes up and the take-home pay goes down, the employee is actually receiving less money in their bank account. And then the employees of the business may be less motivated, as they have effectively had a pay cut. On the other hand, if income tax rates go down, they may be briefly more motivated by having a higher take-home pay. But keep in mind, this is likely to only be in the short term. Bring this video and over 100 more to life with fun, interactive games, quizzes and case studies. Why not try the first 25 completely free by visiting BizzWizard.co.uk. Next, let's look at business taxes. These are taxes on the profits made by businesses. If the business is a limited company, then it will be taxed using what's called corporation tax. In 2021, when this video is being made, this is currently 19%. But this will be increasing in 2022 for bigger companies, with companies making over £250,000 paying 25% on all profits over that amount. So, at the moment, for every £1 of profit a company makes here in the UK, 19 pence of that pound goes to the government as corporations tax. So, sole traders and partnerships, well, they do not pay corporations tax. Instead, their profits are taxed through the income tax system, as we just discussed. Let's now look at the impact on the Codfather of changes in business taxes. As the owner of a limited company, Don has to pay corporations taxes on his business's profits. If the government increases the rate of corporations tax, then Don will have to pay more tax on his profits, which is effectively another cost, meaning that Don's bottom line profits will go down. This means there is less money available for Don to either pay himself dividends or less money to invest in the business, such as refurbishing his premises, buying new cooking equipment, or perhaps even opening another branch. If the government reduces the rate of corporations tax, then Don will have to pay less tax on his profits, which is effectively a cost reduction, meaning that Don's bottom line profits will actually go up. And this means that there is more money available for Don to either pay himself dividends or more money to invest back into the business. Each of the video courses over at BizzWizard.co.uk also includes an interactive business case study that applies the knowledge learnt to a real-world scenario. There are over 1,000 multiple-choice questions, each with detailed feedback, which tests students' understanding of the content. Why not visit BizzWizard.co.uk to find out more? Okay, so the third and final type of tax that we're going to look at is spending taxes. These are taxes on goods and services that people and businesses buy. The main type of spending tax in the UK is called Value Added Tax, or VAT. If you go into a shop and you buy an item that has VAT included, you might not notice without checking the receipt, but the business will charge you for the VAT as well. It's included in the price that we pay. But they have to pay all the VAT they've charged to the government, and they can only keep the difference. It's the same when a business buys goods or services from another business, such as raw materials that include VAT. The selling business charges the buying business the full amount, including VAT, but has to pay that part to the government. If the buying business is VAT registered, it can claim back from the government the VAT that it has paid on the materials it has purchased. If the business isn't VAT registered, then, well, it can't claim it back. So, why isn't every business registered for VAT? Well, businesses that have a turnover of less than £85,000 are not required to be VAT registered. Every business with a revenue higher than this, though, is expected to be registered. If the government increases the rate of VAT, then Dom will either have to take a hit to his profits if he doesn't change his prices, or he might have to put his prices up. He may see that the demand for fish and chips falls when he does this, meaning that his sales and revenue will fall. If the government actually reduces the rate of VAT, then Dom will either see a higher profit from his sales, if he doesn't change his prices, or if he reduces his prices, he may see that the demand for fish and chips rises, meaning his sales and revenues will increase. So, as we have seen, taxation is an important topic both for businesses like the Codfather and for consumers like me and you. Any significant changes to these taxation systems will likely have serious implications on the business owner. It's important that you can explain the three main types of taxation that we focused on in this video, give some examples, and explain what the possible effects of an increase or a decrease on each type of tax might actually be. I want to finish this video with a quote from one of the greatest minds of all time, Albert Einstein. He stated, "The hardest thing in the world to understand is income tax." So if you're struggling to understand our tax systems, always remember, you're not the only one. This has been the BizzWizard. See you in the next video.